Welcome to our series from startup to $250 million. How to use finance and accounting to grow your business. I'm Thomas 1Millon, your host, and today I'm excited to be able to introduce to you Eric Rourke, who's the CEO of Rourke, and he's going to dive in. And today we're going to talk specifically about the startup phase to $1 million. Welcome to our series, Eric.
Thank you very much, and good day to you all out there. Thank you for joining us today. I'm really excited to talk about this topic, Thomas. If you look at it, small business is what really runs business. And these stories of these incredible entrepreneurs with dreams and their successes just gets me excited over and over again. I can't hear enough of them.
Well, let's just dive right in because I know you've got a lot of great things to share, but let's talk about the initial stage of a company. What is something that somebody who's thinking about starting a business needs to do before they even really start?
Well, there's quite a bit of things to do whenever you're starting up a business. But the first thing that you need to do is you need to really understand your vision or purpose. Why are you starting the business? Because I got to tell you, starting a business is difficult and this is going to take you through it. But why are you starting a business? What are you really focusing on? What do you see out in the market that's a problem that you're going to solve to be able to make people's lives better? That's typically why people start a business. And so I think just getting real good clarity on that, being able to communicate that out to not only the business community from a marketing perspective, but to your employees, to partners that you work with, vendors, customers, is just incredibly important. It's the first thing you really need to focus on.
That's great. So you spend a lot of time, and I'm sure you've got to spend some really good thinking time on getting that vision and purpose down pat. What's the next thing you do?
Well, I tell you, whenever you get that clear, then you're able to come up with a company name. So that's really important because I can attest, my company's name is Rourke, right? But especially if you're looking to sell your business down the line or, whatever your goals are or how you're going to market and position yourself in the market, coming up with a company name isn't always easy. Some people get it right away. Sometimes it takes quite a bit of time. So it really takes a lot of creative thought. And again, that kind of really dictates who you are and what you're going to be doing for people out in the marketplace.
So that's two great things right off the bat. And it's not really accounting and finance, but it's super critical to the business, right?
Absolutely.
So I've got my vision and purpose. I got my company name. What's next?
So now it's time to start the company, right? You know what you want to do. You know the problem you want to solve. You even know what you're going to call the company. And the company is its own legal, body or entity, even separate from yourself. But then you're going to have to go out and find a good CPA and an attorney because you're going to start this company. You're going to legally birth it. And there's a lot of things that you want to consider in doing that. And just some very high level things are the state that you're going to actually incorporate in. There's different legal protections for different legal states and different taxes and repercussions of that. The next thing that's just really important, and sometimes people miss this, they get too far down the road. They start off as a sole proprietor and then later go back and redo this, is deciding what type of entity that you want. So when you're a partnership or a sole proprietor, you actually have liability. People can go into your legal assets. Very popular for companies is to start as an S Corp or an LLC. And this is where having the good CPA will help you out as well. Just looking at tax repercussions, liability protections with your attorney, and those things are super important. And then one of the most important things that you're going to have to do is develop your customer contracts. You're going to want to sell things, right? Be able to make money and be able to generate revenue for the business. But these things are all very critical to get right from the beginning because there's going to be some mistakes that are made. I mean, you can't have success without failures. Just don't make big ones. And during this time, these are going to be the things to protect you.
Let's talk about like banking. What does a business need to do with banking?
Well, so one of the things that we see a lot of our entrepreneurs doing, they're really excited, they're ready, they got their company, they got their vision, but they don't go and they think about the back end of the house. So a lot of people will use their personal credit cards, they'll use their personal accounts because they don't really see the difference. But one of the things that is so amazing and will help you out tremendously in how you're doing is immediately go out and set up a bank account for that company. Right? That also helps with that liability protection of the S Corps and the LLCs. But it's really simple. Go to your local bank, whatever bank that you use, let them know you want to set up a banking account. At the same time, I would set up a credit card, because you're going to need to pay vendors. And at this point, you're not going to want to write a whole bunch of checks. You're going to want to kind of use the credit cards as much as you can. But on that note of just not using the personal credit cards, the first thing you want to do is you want to go out and you want to start applying for loans for your business, and do that right away. Lines of credit. So a lot of your local banks, what they'll do, or your bank that you work with, is they will let you borrow money for your business based on your personal credit score. And mistakes that I've seen people make is they go, well, I'll use my credit cards, or I'll use a lot of my cash to be able to invest in the business. And then they need to go back and go get that credit, but their credit's changed. So if you apply from the beginning, when you are the most financially stable, because you will be making investments in this business, you're going to not only have the runway of the business credit, but you're going to also have your personal resources. If you flip it the other way around, you may not have that runway of the business, because your personal resources are going to change your credit position. And that happens in pretty much all businesses, and especially as they start.
You know, a lot of states and local areas have different requirements and regulations. What are some other things that you have to do for your business to make sure you're ready to sell?
Yeah, well, and when you start looking at businesses, there's all types of regulations, right? But one of the things that's very fundamental is you're going to have to get a business license, right? So wherever you're doing business and conducting business, if you're in the construction industry, you're probably going to have to get licenses with the state board. If you're manufacturing, you're going to have to look at like air quality and things like that, depending on what you manufacture. But then if you're selling products, you may have to get sales tax certificates or exemptions to be able to operate your business. Thomas, it really starts to become company and industry specific, but there's all sorts of areas that you got to look at as far as licensing and just making sure that you're in compliance in order to operate your business. And if you don't do that, it could have some pretty adverse consequences to you, not only financially, but in being able to even operate your business where you're at.
What about the books? The books of the business.
Now you're speaking to my heartstrings, Tom. I'm an accounting and finance guy by trade and by nature. So now that you've done the groundwork of laying out separate lines of credit and accounts and everything like that, I highly suggest get into a nice, inexpensive accounting software package. When you do that separate breakout, a lot of these transactions will be able to download for you and do the work for you, so you automate. QuickBooks Online is probably one of the most popular that we see out there. But by doing that, you're going to be able to get a good feel for, are you making money or are you not? Because when you start out, there's definitely going to be times, more than likely, where you're not going to be making money. But then you need to understand that so you can know what your decisions are and how to better be able to manage cash. And we'll talk about cash in a little bit as well.
You talked earlier about just line of credit, right?
Yes.
Getting that line of credit early. Can you talk about what if you want to have an investor? What do you need to do or think about?
Well, one of the biggest things that you need to think about whenever you're taking on investors in order to raise cash, right? Because there's debt and then there's equity, right? It's two different ways to get cash, is making sure you have the right agreements in place and that there's an understanding, because not only can that, cause a lot of problems for you and the investor as far as communications and things like that at a later date, but one of the things that happens is you're getting all this money in, you got to keep track of who owns what in the company. And if you don't do that, when you're trying to get additional financing or trying to sell the business, or it has big repercussions, even when you're doing distributions, dividends, things like that. So it's so important to keep a good, and they call it a cap table, right? Of what equity and obligations are out there for ownership into the business. It is like your body, right? So cash is like blood in your body. It's important and it circulates in your body.
You talked about cash.
Yeah.
Especially in a startup to $1 million range. How should a business owner think about cash?
The best analogy I can give is, so cash is like blood in your body. It's important and it circulates in your body. That's critical to get oxygen and to be able to feed the different areas of your body. And you can lose a little bit of blood, right? Or cash, and you'll be fine. The problem is if you lose enough blood, then just like your body, your business will be very hurt or potentially die. And so it's one of the most critical things that you can do.
What are some ways to manage it? What are some things you need to do?
Yeah, I think that the first thing that we talked about is getting a good accounting system to be able to manage cash and see whether it's going up and down, seeing where the trends are at with profitability. I think that's going to be very helpful. And look, you want to be very sensitive at this stage and really be focused your cash on things that are going to improve your revenue, because you need more cash in your operations, because you need to deliver to be able to get the cash to come in, right? Revenue isn't revenue without cash collections. So that's going to be important. You're also going to want to take, and at the startup stage, it becomes hard because you don't have all these resources, but just lay out just kind of a preliminary budget, right? Hey, here's my money coming in based on revenues. Here's my money going out. Even if you just keep it to kind of simple, simple inflows and outflows, that's very simple. When we deal with businesses later on that are struggling, we do what we call a 13-week cash flow forecast. And what it will do is, here's the cash coming in, the cash coming out for a given week, beginning, ending balance, and then we monitor where that's at. That's a great practice for early stage companies. If you're a venture capital backed company, that you're going to really need to do and focus on. But being able to do that's going to be important. The other thing that's really important is just being able to keep good books and records, because if you want to go out and get borrowing, or you want to get investors, they want to see how you're doing. So, and a lot of people are like, well, we were doing, but now we need money, and then they have to go back and do that. But it's usually they're going back and doing that at the sensitive time when they need money the most. So there becomes a time lag. But just keeping good books and records, keeping a budget, a cash forecast, and just thinking of cash as your lifeblood are going to be critical.
So let's assume we started up and we got a little bit of revenue coming in. It's time to hire that first person. What are some things you should do whenever you're hiring that first person? Or even
the common misconception is when you start a business, you've already hired the first person, and the first person should be you, right? And here's where a lot of business owners actually, they get so enthralled with what their vision is and what they're doing and what they want to do, they forget to pay themselves. And I just highly encourage every business owner out there, just even from the beginning, even if you're paying yourself a minimum wage, pay yourself. The money's coming from somewhere. Get used to that practice, because you're going to need to continue to do that. And so in order to do that, when you hire your first external employee, especially in these states where the laws are very employee friendly, you're going to want to get a payroll service. It's too important with the taxes, the remittance. It can be very sophisticated, especially when you look at, federal, state, and local taxes, what needs to be done. And this is an area that can be a big liability for you, not only in the company, but for you personally, if you don't manage that correctly. And so the first thing you got to do is, when you take on the first employee outside of yourself, right, is to go out, get a payroll service. They're not that expensive, and it makes it really easy.
So that's great. So we got there, like get in the habit of paying yourself. And then when you do bring other employees into the business, like use a payroll service. That's great advice, especially with all this things that you might not think about, with legal liabilities, etc.
They're changing laws constantly.
Tell me, like, what about any of the other back office stuff? When you start thinking about your technology and HR and things like that, when you start, bringing on all these people for that?
Well, the first step I would say, Thomas, is think about your front office even before your back office. And we kind of talked about that a little bit earlier. I mean, being able to establish your brand and your marketing. So when I talk to people that are thinking about their business, I actually advise them, get the vision, the purpose, the name, and get your marketing going first. Like, how you deliver the message. Because the quicker and better that you can deliver the message is the quicker that your business will take off. So that's the first thing I'd say, and that reflects your sales. But then it's really important, because you're going to have to manage all these tasks, and you're going to want to be focused on revenue and operations. Is outsource as much as the back office as you can, right? With the HR, the IT, the accounting work. Those aren't the things that are going to drive the revenue in your business and drive the cash. They're very important and they're critical to be able to do and help you make good decisions and help you keep out of problems and issues and help your business run better. But as much as you can do that, because what you can do is, for very inexpensive, you can take fractional people and be able to have them help you, and they're going to provide better expertise. A lot of times what happens is the spouse will come in and do this work for business owners in this stage. But if you're not fortunate enough to have that ability, then you're going to want to go out and look at outside people. And if you need help with that, by all means, let us know. We know a lot of the great people who are out there and love seeing businesses grow.
Well, that about wraps up our time together. Thanks so much, Eric, for shining a light on things that people need to do when they're jumping in from a startup to that first million. And what I'm excited about is I know we're going to actually go from startup all the way to $250 million. But this was a great just kickstart for this series, and appreciate it. Thank you so much.
Well, thank you, Thomas. And I will say for all you business owners out there, entrepreneurs, it's a heck of a journey. There's a lot of ups and downs, but it is so worth it for what you're going to do. I encourage you. I wish you guys the best of success, and God bless you all in your journeys and your ventures.